The announcement and official approval of Iraq's 2025 budget has ignited one of the hottest debates in financial and economic circles. Will this budget finally bring about a change in the exchange rate of the Iraqi Dinar? For years, Iraq's currency has been the center of speculation, both locally and internationally. From citizens in Baghdad's bustling markets to global Forex traders watching from afar, everyone has had their eyes on the dinar. Its history has been one of strength, collapse, dollar dominance, and cautious stabilization. Now, with the publication of the 2025 budget, the possibility of a transformation is once again on the horizon. The budget is not just a financial document, it is a reflection of Iraq's political choices, economic priorities, and vision for the future. It sets out how billions of dollars in oil revenues will be allocated, where investments will be directed, and how the government plans to manage debt, inflation, and development projects. But more importantly, it shapes the framework within which the Central Bank of Iraq (CBI) operates, making it a key determinant of the dinar's stability and value. When the budget is approved and published in the official gazette, it becomes legally binding, leaving no room for speculation. It is the government's economic playbook for the year. In 2025, the stakes are particularly high. Iraq has made significant progress in stabilizing security, rebuilding infrastructure after years of war, and strengthening ties with international institutions like the IMF and World Bank. Oil revenues remain the backbone of the economy, but there are ongoing efforts to diversify into agriculture, tourism, and technology. The government is also pushing for reforms in the banking sector, anti-corruption measures, and modernization of trade practices. All of these steps are linked to the performance and credibility of the dinar. Citizens want a stronger currency that restores purchasing power and national pride. Investors want stability and confidence in Iraq's financial system. Policymakers want to demonstrate that Iraq can stand on its own feet without over-reliance on the US dollar. The central question remains, can the 2025 budget actually change the exchange rate? To answer this, one must look at Iraq's recent history. In 2020-2021, the country faced massive financial strain due to falling oil prices and the COVID-19 pandemic. The government devalued the dinar, moving the exchange rate from 1,190 IQD per U to 1,450 IQD per USD. While this helped ease immediate budgetary pressures, it placed heavy burdens on ordinary Iraqis, who saw prices of imported goods rise dramatically. In 2023, the rate was adjusted again to around 1,320 IQD per USD, restoring partial stability. These moves showed how closely the budget, oil, revenues, and exchange rates are tied together. The 2025 budget, with its focus on reforms and higher revenue expectations, could provide the platform for another shift potentially, even a revaluation toward a stronger. But there is more at stake than just numbers on an exchange board. For ordinary Iraqis, exchange rate changes affect everything from the cost of food and medicine to the value of salaries and pensions. For businesses, it determines the cost of imports and competitiveness in exports. For international investors, it is a measure of Iraq's credibility in global markets. Thus, the budget's implications on the exchange rate extend far beyond monetary policy. They touch the daily lives of millions and influence Iraq's reputation on the world stage. Another factor making 2025 different is the rising speculation among international financial communities. Online forums, investment groups, and even regional media outlets are buzzing with discussions about whether this budget will finally unlock a revaluation. While some believe the government may opt for gradual adjustments to avoid economic shocks, others argue that Iraq has both the reserves and the momentum to significantly strengthen its currency. The truth lies somewhere in between, and the budget is the key to understanding the government's actual intentions. In conclusion, the 2025 budget is more than just a yearly fiscal plan. It is a foundation of Iraq's economic future, whether it directly changes the dinar's exchange rate or lays the groundwork for gradual revaluation. Its publication in the Gazette signals seriousness, transparency, and intent. Iraq's people are watching, investors are calculating, and the world is paying attention. The question remains unanswered. But the journey has clearly entered a decisive stage. Will the 2025 budget finally transform the Iraqi dinar's exchange rate and restore its lost glory? Iraq's economic story is one of highs and lows, and the dinar has reflected every chapter of that journey. Once among the strongest currencies in the Middle East during the oil boom of the 1970s, the dinar gradually collapsed under the weight of war, sanctions, and political instability. The Iran-Iraq War drained resources. The 1991 Gulf War and subsequent sanctions crippled trade, and hyperinflation eroded public trust. By the early 2000s, the US dollar had become dominant in Iraq's markets, symbolizing the loss of confidence in the national currency, despite massive oil revenues. Corruption and poor governance prevented those resources from stabilizing the economy, leaving Iraq heavily dependent on oil and vulnerable to global price swings. The new 2025 budget is seen as a turning point because it not only allocates revenue and expenditures, but also signals deeper reforms. For the first time in years, the government has presented a plan that emphasizes diversification beyond oil, with investments in agriculture, technology, and infrastructure. It also promises tighter financial oversight and anti-corruption measures. While aligning with recommendations from international institutions like the IMF and World Bank, these reforms are critical because they directly influence the credibility of the dinar and its ability to hold value in global markets. The budget also strengthens the foundation for a possible shift in the exchange rate. In recent years, Iraq has adjusted the dinar to relieve budgetary pressures most, notably in 2020, when the rate was moved to 1,450 per dollar. While these changes supported government revenue, they made life harder for citizens by raising import costs. With higher oil prices now filling state reserves and reforms underway, many expect the government to seize this opportunity to strengthen the dinar. A stronger currency would not only improve citizens' purchasing power, but also rebuild pride in Iraq's financial sovereignty. Oil remains a central pillar of Iraq's economy, and the 2025 budget reflects this reality. Over 90% of revenue still comes from oil exports, meaning fluctuations in global prices will always shape the dinar's fate. However, with global energy demand remaining strong in Iraq, holding some of the largest reserves in the world, the country has a chance to use oil wealth more strategically. If revenues are channeled effectively into rebuilding infrastructure, stabilizing reserves, and funding development projects, the dinar could gain the backing needed for a meaningful revaluation. The potential impact of such a move extends far beyond Iraq's borders. A stronger dinar would alter regional trade dynamics, as neighboring countries engaged in import-export activities would need to adjust to new price levels. International investors, many of whom have long been cautious about Iraq, could view a revalued and stable currency as proof that the country is finally turning the corner. Forex traders worldwide are already speculating about the possibility, with some predicting gradual strengthening and others expecting a bold reevaluation if conditions align. For ordinary Iraqis, the budget carries deep symbolic meaning. After decades of hardship, inflation, and dollar dominance, citizens long to see their currency reflect the nation's true strength. A stronger dinar would mean cheaper imports, more affordable goods, and renewed faith in the government's ability to deliver economic stability. It would also restore dignity, making Iraqis feel that their money has real weight in the world once again. Of course, challenges remain. Political divisions, corruption, and bureaucratic inefficiencies still threaten progress. Security concerns in certain regions continue to cast a shadow. And without sustained reforms, a revaluation could risk being temporary rather than lasting. But the difference in 2025 is momentum. With the budget legally enshrined through the Gazette, Iraq has signaled to its citizens and the global community that it is serious about economic reform. The road ahead is uncertain, but the direction is clearer than before. Iraq has the resources, the international partnerships, and the public will to support a stronger currency. Whether the dinar experiences a gradual climb or a sudden revaluation, the 2025 budget has laid the groundwork for transformation. The eyes of the world are now on Iraq, waiting to see if the nation can turn its financial vision into reality for the first time in decades. The possibility of a dinar that reflects Iraq's true economic potential feels within reach, and with it comes the hope of a brighter, more stable future.